Welcome to this week's version of Nickels and Dimes, our weekly video series. Where will the ultra wealthy invest in 2023? Today, I'm going to share with you a recent poll done by Fortune magazine that shared some very telling information on where the super successful investors think there are opportunities, and obviously also where they think there are not opportunities. So let's dive in. Where will the ultra wealthy invest this year? As I noted, this was a Fortune magazine study done with 1,200 investors, around $130 billion in total net worth, with the question being, where will you invest your money assuming there's a recession? And maybe a surprise to some and not a surprise to many, it's not playing the stock market, meaning they're not going to deploy money in the stock market, and for various reasons. But right now they have a high level of cash. Cash is king, according to the survey, where they feel that ultimately the real estate market is going to continue to weaken. So they want to pounce on real estate opportunities in the next 9 to 12 months. And obviously having a high level of cash would be ideal in their mind. So now, note, cash could mean in their mind money market funds, could be treasuries. Short-term treasury rates are hovering around 4%. That's very attractive on a risk-adjusted basis. But cash is king, according to the ultra wealthy folks that were surveyed here, the 1,200 folks. Again, waiting for continued opportunities in the real estate market. Well, specifically, over 70% surveyed said they plan to invest in multifamily units, medical facilities, and storage units, and they would generally avoid office and retail. Obviously, if the recession does hit, the office and retail space would be negatively affected. In comparison, a recent poll of retail investors found that just 33% plan to invest in real estate this year, favoring, on the other side, equities, specifically big tech and green energy stocks. Well, the ultra wealthy are also interested in investing in private equity companies where they can leverage their own entrepreneurial skills and felt more comfortable working with private equity firms that were cash flow positive and profitable. And there's a lot of truth to that, not only, of course, extracting data from the survey, but in my own experience, I will tell you, in speaking with very successful people who tend to have most of that net worth or have created most of that net worth in an operating company, they tend to, at least in my experience, be more comfortable investing directly in an operating company or a strategy that invests in operating companies. Why? Because in my mind, I think they could relate to those companies better. They understand the business model better. And they also feel like they have more control over what they're investing in versus a traditional, let's call it public equity markets that may be more affected by, a headline or a Fed meeting, or even Chairman Powell, the Federal Reserve Chair, making a comment or two that maybe rattles the market. So interestingly, this is an interesting data point. Now let's look at where the ultra wealthy tend to put their funds on a long-term basis. As noted earlier, traditionally a high level of allocation to real estate. And this is as of a recent poll by Tiger 21, which is a network of ultra high net worth investors. Real estate with an allocation of around 27%. Private equity, as noted earlier. Of course, public equities, as noted earlier, a small relative allocation. Now, as you know, a traditional investor typically has a 60-40 portfolio. So 60% stocks, 40% bonds, or somewhere about that generic allocation, depending on what the risk tolerance is and their time horizon. But again, a 60-40 portfolio for the traditional investor. You can see where the traditional investor versus the higher net worth investor compares. The higher net worth investor, by and large, has their money deployed in non-traditional investments, and I've mentioned this a few videos ago, where they have allocations to, for example, hedge funds, as noted, different types of real estate versus just residential, private equity, and of course public equities. And note a very small allocation to fixed income, 7%, which again, in my experience, a traditional retail investor would traditionally have more money invested in fixed income, 20, 30, or even 40%. Very telling survey, very interesting information in terms of tapping into what the ultra high net worth investor is investing in. And in fact, you could even compare this allocation to what would be a traditional endowment model. Like if you look at Harvard and Yale's endowment models, they are very similar to what we're seeing here, where it's non-traditional asset allocation, which in their mind lowers risks and gives an investor potentially a better return longer term. So again, interesting survey that I thought would be of value to share with you today. If you would like a second opinion on your portfolio or financial situation, you can go on our website. This is our website at nicholswealth.com. You can click on the upper right-hand tab here, request an appointment, fill out the information, and one of our advisors will reach out to you, answer your questions, and hopefully give you some clarity in today's challenging financial environment. Thanks again for watching. Bye-bye.